Good morning. Welcome to Pries Capital. You must be the new recruit.
Oh, is this the new recruit?
Yes, it is.
Awesome. Follow me, Mr. Superstar. Here at Pries Capital, we love showcasing art. The stunning bronze dragon sculpture Pico by the renowned artist Nano Lopez is definitely a showstopper. And these pieces on the walls, the legendary Michael Godard is practically a rock star in the art world. There's art all over the office, creating a vibrant, creative atmosphere to work in and collaborate in. And here is Tyler Pries, our hardworking mortgage loan officer. If you're looking to purchase real estate in the Myrtle Beach area, Tyler's the guy to know.
Looks like you have your hands full. Ashlyn, can you grab a book for him? And I'll see you at the meeting.
And here's Raj, one of Jason's right-hand guys for commodities trading. Good morning, Raj.
Good morning.
Meet the new recruit.
Hi. Hope you like to work hard and play hard. This is a high-stakes environment. Split-second decisions can make or break an opportunity. Welcome to the firm.
Don't worry about Raj. He's a quiet powerhouse, but he's critical to everything we do here. And here's the founder and real estate powerhouse herself, Tina Pries.
Good morning. How are you? So glad to have you with us. Can't wait to see you in action. We're just about ready to start the meeting for Jason's market analysis. I will see you both in the conference room.
Good morning, Jason. This is the new recruit.
Hey, welcome. We're glad to have you here. Your skill set is exactly what we need. I love people dedicated to their craft. But hey, I got to get ready for this morning's analysis, so I'll see you in a bit.
Thanks, Jason. You're awesome. Right here, we have one of our many conference rooms. And down the hallway over here, we have the intelligent and sharp-eyed Miss Jill.
Why, thank you, Ashlyn. Nice to meet you.
Jill thrives in the world of spreadsheets, balance sheets, and financial forecasts.
You'll fit right in, so go check out your new office.
And here's your new office. And over here, we have some welcome goodies for you. Just a small thank you of saying welcome to the family. Okay, so I've got to get ready for the meeting, but check out the gym over here, grab some coffee and bagels in this room to the right, then I'll meet you in the conference room.
Good morning. Thanks for joining us. Go ahead, take a seat. Welcome back to another morning market analysis. Let's get comfortable and dive in.
The holiday weekend is behind us, and now it's time to get back to work because this morning's chart just handed us one of the cleanest opportunities we've seen in a while. A double bottom has formed right into a bullish, higher time frame structure, and when you combine that with how the overnight session traded, today's session has all the ingredients for an easy money type of setup, as long as we let the trap confirm before stepping in. Good morning and welcome back to another Team Day Trader edition of the Daily Market Analysis. Settle in, grab your coffee, and let's prepare for today's trading session. As always, take a moment to subscribe and explore the resources linked in the description below. How's everybody doing this morning? Hope everybody had a great Thanksgiving weekend. Hey, James. Shout out to James this morning I see in the chat, and I see Robert in the chat. Glad to see you guys. Thank you, everybody, for showing up. If you have questions or anything, make sure you throw it in the chat. And if I notice it, I will recognize it, try to answer any questions. But with that, usually I like to start out with the dashboard. Sometimes I do, sometimes I don't. But just FYI, there's not too much on the docket as far as major scheduled events for today. So I don't know how much we have to really concentrate on this. It's kind of a quiet day today as far as macro. Now tomorrow I believe we have a couple releases that we'll take a look at, especially around the 10 o'clock time, but we'll talk about that tomorrow. Going to our, for the usual Fed update, right, next week we have the interest rate decision, and right, we're back to that 87% probabilities of a cut. I really think this is gonna stick. Hey Earl, how's everything doing today? I think this is gonna stick. We're in the quiet period, right? So last night Powell talked. He didn't really talk too much about anything because they're in the quiet period before the FOMC rate decision. So unless something just really gets spooked, we're not going to get non-farm payrolls till after next week's Fed rate decision. So there's nothing of new high substance that's more than likely going to change the probabilities. So I would, just as we go forward, expect that we're getting a cut on next week. So, and again, we had talked about this, back and forth ongoing, right? The no cut to a cut. But I think most of us, as we were looking, if they didn't cut in December, then we were looking at a cut anyways in the first quarter of 2026. So really what they're doing is they just move that forward, right, a month. So before, when we were looking at this, they weren't, they're a week ago, right? There was no cut, or I shouldn't say a week ago, because not last week, but the week prior, before Thanksgiving week, there was a no cut. But then you had somewhere in the first quarter was a high probability of that quarter point basis cut. So, they just moved it to December. They moved it a month ahead. And does that change anything in the greater scheme of things? Not much. I mean, all you did was just pull it forward just 30 days. So I think the one thing that we have to kind of keep track of, which if anybody goes back through old videos, right, any of the archives, right, there was this cut, there was a second cut, and a third cut, and then we even had built in this coming back in, right? So there was these cuts, and then you had going into 2027, right, they were doing a hold, and then you had a hike towards the end of 2027 that now is, right, kind of being taken off. I mean, we're talking a couple years away anyways, but I kind of get this habit of constantly watching how the market is pricing cuts into the future. This is forward looking. So I think it's important to, look at how the behavior of the committee is thinking through right into the future. And just, helps me also as I'm gauging in the legacy portfolio, right? That what is everybody thinking? What is the, right? Really this is based on the Fed fund futures. So, right, this is the betting markets looking out forward into the future. So how are they perceiving? How is the market itself perceiving cuts or hikes for that matter? And if you get used to doing that, there's portfolio allocations based on those assumptions, and I think it's important. This isn't a class on futures or Fed or the rate cuts and portfolio construction, but I urge everybody to kind of look into that, take some time, educate yourself. The one thing I did want to talk about on here, we are going to get on this next presser or the next meeting, we're going to get the tip of my tongue. I hate that when you have something in your head and then you lose it. Oh my gosh. Why am I not thinking about this? Anyways, it'll come to me. I'm sure somebody might in the chat know what I'm thinking about. The projections, right? So the report on their, still on the tip of my tongue and I can't think of it. The the projections. Anyways, oh, what a morning already. Let's get into the morning market analysis. As of 7 a.m. when I wrote this, it's now 8:30. All right, futures at 7 a.m. were 16 and a quarter points. We're roughly unchanged. It's still 16 and a quarter points. I shouldn't say that, 17 and a quarter points. The overnight volume delta showed a moderate, so here you had a moderate 2.64% net long skew. And again, just a sign where the buyers are leaning early. When we look at the charts, when we narrow it down, you can see like they were really leaning right into it right at 3 o'clock. That was an inflection point, and right, that kind of, there's a skew, a net long skew as we open up, and it's a decent skew. It's 2.64, so I think we should take that into consideration as we open up into the open. We are opening out of balance. We'll see that on the chart. So again, we're opening out of value, right? This kind of gets us into the day trade setups, right? So there's an expect expansion behavior to start the session. 10-day ATR sitting at 105 points. So again, the volatility lately has gave us really good range expansion. Now that's been falling, was at anywhere at the height of like 120 points. We've kind of backed off in the last couple weeks, but still the ranges are fairly good. I mean, there should be a lot of opportunity to take advantage of these markets day trading. Things to note we're going to talk about, right? We're bullish into a range. Yesterday's late day drive lower, which we'll look at that, kind of set it up for today's trade. The overnight action, we're going to specifically talk about that and how that sets up. This really today should be another easy day. And again, when I'm talking to you guys, there's days that you come into the market and right on I always think of on a spectrum, right? Is you come into the market and there's easier trade setups, and then there's harder trade setups, right? Easier, difficult, hard. And, when I'm coming in today, I'm more leaning, right? If this is in the middle, I'm leaning more on the easier type setup trade into the market. So you shouldn't feel any anxiety in today. It's a really clear setup. So we'll really dial that in. The best trades are in bullish environments after a sharp pullback. So we kind of got that little bit of a sharp pullback intraday yesterday. Again, we're day trading this. As we open up in today, we're going to talk about how my day trade setup, I'm looking at day trade setup number 7 with a trap pattern. And then that's in the construction or in the structure of a broader structure of day trade setup number 4. So I'm looking at 4 as the main setup, in the broader structure, and then I'm really, to dial it in on the trigger chart, I'm really looking for day trade type 7. We're going to talk about the key levels to watch, 68, 10, 75. We'll talk about why I believe that's important and a good reaction function. If there is any kind of selling pressure, which again, we'll talk about, right? If my trade setup is wrong, right, then that deeper rotation towards 67, 65, but I'm really not looking at that. But again, right, as you're constructing setups, you should have, where am I wrong? And so if I'm wrong, then, right, the sellers succeed pushing it through, then they'll really rotate that back to 67, 65. But again, this is where we'll talk about the 68, 10, 3/4 and why that comes into play. As we look into the charts and as I talk, I want you guys to understand how this, in the developing value as the trade opens up and we're trading this morning, keep an eye on how that value overnight range shifts, right? And I have a chart, right, that kind of trigger chart number 5, where we talk about where value, developing value, not static value, but as the day is live, trading and everything is moving in live action, that you want to watch that developing point of control shifting upward, right? That's what we're going to look for. So as we're in this tight consolidation, you kind of want that to kind of constantly, be building higher, right? Higher highs, higher lows. Same scenario. A close above 6,900 will show upside continuation. That close below 67.65 will signal a little bit of selling pressure, and then we'll have to kind of take that in stride as the week progresses. But I am bullish going into today. You're right, my directional bias is taking long setups off the first Q. So I'm not going to get too much into this weekly. There's nothing that says, hey, watch this, that I'm noticing. Everything really comes off of the hourly chart and the trigger chart, which is the faster time chart. So let's just get right into those two charts, because again, today is very simple. So as we had talked in the past days, right, we had these lower lows and lower highs come into play, right? And then last week, right, we had a shift change where, right, I think the last time I talked to you guys was that Tuesday, and I was saying, watch how this 66.70 plays in, right? Sellers need to, right, get into that. I think we were talking, my memory serves me right, we were talking about this volume node and this, right, back and fill into this period. And I said, hey, look, the line in the sand is that 67.40. Buyers take that above, in which they did that Tuesday, boom, then it's, right, buyers kind of flip back into control. You had this low volume node here. We talked about this a few weeks ago, this 68. At the time, back in this period, right, when a few weeks ago, this low volume node was 68.09. There's been some shifts, right? It's now 68.10 3/4. And again, when you look at this move higher, right, this move up, how do I talk to you guys a lot of times? And again, this trading shouldn't be that hard. You shouldn't have to complicate it. Too many people have these indicators, all these things on the chart, flashing, beeping. Just look at pattern recognition. It's very simplistic, right? So you have a big move in one direction, and it's either going to flag back, it's either going to range sideways, or it's going to channel up. It's literally those three. There's only three ways. Three ways that moves, right? And so when you look at this on a very simplistic, we moved up higher, we cleared this high, and again, what are we doing? Now on a faster time frame, I'm going to dial this in a little bit sharper, because when you're moving sideways, there's two sideways moves. There's the equal lows and equal highs, and then there's what I talk about sometimes is there's the consolidation. These are both, right, they both fill out these volume distributions, right? So you can fill out a volume distribution when you're going sideways in two ways. It can be an equal highs, equal lows, which is, stupid simple, where it's making equal highs and equal lows, and you're just rotating that trading range. Now the trickier one is when there's a triangle involved, because in a triangle, right, you're trying to catch inflection points on the chart, and you end up getting caught in this period trading faster time frames where you make a low, you make a high. Here you get an inflection point where you're making a higher low, but then you make a lower high, right? And so when we, this is an hourly chart, but what you'll see vividly on the 5-minute chart is we are making, right, that consolidation pattern in which you're making, right, a high, a low, and we're making a lower high and a higher low. And, right, we're just constantly in that consolidating. Now, in that consolidation, what is it doing when you look left? We are forming out this distribution node, right? So you're always moving from value to price discovery to value to price discovery, back and forth. So today's trading should be very simple. And what do we see on the charts? Where we see a big move up. We cleared this inflection high, which created us from being bearish to flipping bullish. There was a neutral stance at one time, right? But this ends up the market participants taking it over. This inflection high creates, right, a confirmation that there has been a trend change, right? We're no longer making lower lows and lower highs. We're now making, right, what seems to be higher highs and higher lows. And as the trend is your friend. You hear these synopses where people make these quotes and, can you counter trend trade and be profitable? I don't want to say successful, but I'd say, can there be some profits? Yeah, counter trend trading, right? You can take some profits off of the market. But the really juicy market, and if you're going to make this to be a profession where you actually make a living wage out of it, you're going to want to trade the trend, right? The trend is your friend. And then, sometimes the difficulty is recognizing when that trend flips, right? And so for me, simple, stupid, it's when, you stop making higher highs and higher lows or lower lows and lower highs, right? And again, sometimes I think the tricky part is when people can't see a trading range, right? Where there's equal highs, equal lows, or again, that triangle pattern. So, right, this is where that 68.10 comes into play, 10 3/4. Anything below that, right, the buyers, display a little bit of weakness and the sellers have a chance to kind of step in. This is where, right, if we get undercut that 68.10, then we kind of get sucked into, this is where that 67, 65 comes into play, where price will get sucked down into previous trading range. So it's very important that you're cognizant of, what's happening on the charts. These breaks between low volume nodes and high volume nodes is explicitly important. So, right, that's how that breakdown will come into play. As of right now, there's nothing that shows that. Let's get into the trigger chart. I don't have nothing to show on the weekly profile, so I'm not going to waste time. We're just going to jump right into the trigger chart, where I think this is important. Let's move this over. And again, so we can see that we're really consolidating into this triangle, right? So what are we looking for? We're looking for a trap, right? When we look at this, we're up at the higher end of the range, right? So, right, not mom, but you are taught not to buy high and you're taught not to sell low, right? That's foolish to buy high and sell low. Obviously, you want to buy low and sell high. So when we're opening up in this morning, right, we're kind of up at the upper part of the triangle, the consolidation. What we'd like to see is kind of price to come down in, kind of get like a trap low. That's why I talked about the trap pattern, and get a trap low. Watch as this, right, again, as that volume distribution gets built out. if it is bullish, right, and we're not in an inside day, we have, right, like this is yesterday's range. Let me see if I can make some different colors here. This is yesterday's range. And so what we want to see is a breakout of that range, right? So how would that break out? You know, if we don't have, what we don't want is an inside day, right? Where we stay consolidated in yesterday's range. I think when the market opens, that's the thing that you're going to want to watch for, is make sure and confirm that we're not going to get stuck in this middle and trade and really get chopped up, right? I know sometimes I've talked about, you know, where as a boy, man, when you were younger, mom or dad always gave you advice of, you know, as far as us boys, right? Don't mess around, don't fuck around in the middle. Excuse my language. You know, don't get caught up messing around in the middle. Some, you know, a lot of times you might come home with some kind of, you know, infection. Probably the best words to say. Trying to make some jokes here. Bear with me. So, you know, messing around in the middle is you know, something that you don't want to do. I use that in trading, that kind of analogy, just as humor, light humor. But don't mess around in the middle. You know, you're liable to get either a disease or, you know, probably somebody pregnant. So try not to mess around in the middle. I say that to hopefully, like, you hear that and it kind of sticks with you. Mess around in the middle, you get chopped up, right? The better trades are the edges. So watch as that opening sets up, that price doesn't get sucked down in here and then mess around in the middle. Those trades are always hard to play out and to execute on. What we're really looking for is kind of a trap setup, right, where price really quickly, right, gets rejected underneath a low, an inflection low, right? This is where the trap comes into play. And then, right, a move out of this triangle consolidation. And then what you're going to look for, or what I'm going to look for, is once that does, you know, trap and then get out, I'm looking for then the retest, right? Retest, breakout, pull back, retest, and then the move higher. And then again, taking out yesterday's high. Again, thinking one time framing where you make, again, series of higher highs and higher lows. If these were like day candles, right? This was a day candle, right? The low gets formed somewhere in the prior day's range, and then you break out of yesterday's or the prior day's high, and you make a new high from the prior day's high. And that's what we're looking for. That's what I'm looking for, is again that kind of trade in which this is consolidated now since Wednesday of last week. You had Thursday, Thanksgiving, and then you had Friday's shortened day. Yesterday had a nice pullback inside, right? Consolidated into that range. When we look at this, we had on a intraday faster time frame trade, you had a spike down into a channel, right? So you had a spike into a channel, rotated in the channel, and then we broke out, right? And now we're sitting in this upper distribution on a faster time frame. Oops. Zoom this in. Right now what we're looking for is this to not get, again, we're still trading inside. We haven't got any confirmation that we're outside of this consolidation triangle. And so, you know, as we open up at 9:30, the object to be watching for is that this doesn't become day trade type 3, right? So day trade type 3, we get sucked back in here, and then we chop around for most of the day, or if all of the day, and then we stay consolidated tight in this triangle. I really don't want to see that. That just makes for a boring day hard to get into trade setups, especially if the range is going to be like condensed into, right, say 68.40 to 68.25. There's only, 25 points of range to really kind of get any kind of juice for profits. That makes for a really sucky day trading. What I'd really like to see trading, and that I'll be really watching for, is that thing is, does this get sucked down, and then it's trading day trade type 3, and then that's going to be just hard to trade, and I'm not really looking forward to that, but I'm going to be watching for that as it opens. Or is it going to give a nice juicy trade where, right, we're in here, how do we bust out of this triangle? And right, the better trade is to kind of get like that opens up, excuse me, right, that volume comes in on that opening, that first 5, 10, 15 minutes of trade, and we kind of get like a poke through. It gets rejected fairly quickly, and then they break it out, and then we move, right, higher. And again, when we take this out longer term, right, what we're looking for, let me take this back to that hourly chart, right, is then, getting this price that, when I think about this, right, looking for day trade type 7, that ignition bar where you get an hourly candle move. You can't probably see that. I'm trying to make it where you guys can see, but yet still see this back in here, because that was the all-time high, is at 69.53 3/4, right? Where you get that move up in an hourly candle bar, and then we move into B period and C period, and you get another thrust, right, and another thrust as we move into like 3 hours of trade, and we're back up in and around this high right here. And then there'll more likely be some consolidation in and around that 6,900. And then again, you have to watch tempo. And as the day starts to conclude, right, you kind of get like a little bit of a late day stage move up into 69.25. And then as we go into Wednesday, right, we kind of break out of that, into that, take out that all-time high. And it's a setup in which, again, from a daily perspective, right, you're kind of coming in, taking out that all-time high, weekly chart into the daily chart. On an hourly chart, right, this is going to take today and tomorrow to kind of get into that. But again, as you're moving the ball forward, that's what you're going to want to look and see, that, right, the buyers are taking an active role into accumulation and accumulating for price discovery higher and not distributing prices lower, right? So the thing that you're gonna want to watch is, one, that tempo, right? Is as we're into, and I'm probably beating a dead horse, but hopefully I'm trying to articulate, this kind of setup where this could be a little bit of early, where we need a little bit more time, and this comes in, and then this messes around still for one more day, and then we'll be talking about this Wednesday and Thursday as the breakout. Or was there enough time already spent in last week, Thursday, Friday, Monday, and this overnight, where we're getting that breakout? Looks like we are getting a little bit of that breakout through that top of the trend line, right? So this is looking good for the buyers. So as we open up in 30 minutes, right, as this kind of comes up and we get close to yesterday's high, right, then what we'd be looking for is then the breakout, pullback, and then the go, right? And that this doesn't set up like a trap, right? A trap on the, right, set up a bull trap where it traps up in the highs and gets sucked back down. You know, this whenever you're trend trading, the trend should always be that, right? Stair step up. Stair step up. So we hit an inflection low, right? Stair step up, pull back, stair step up, right? Pull back, stair step up, so on and so forth. So we should be moving forward. So that's today's trading. If anybody's got, any questions, right? Well, let's go back. We'll close it. Oh, I do want a note today as we conclude. I got an appointment tomorrow, so I won't be here in the morning. So just FYI, I'm not going to be here in the morning doing the morning analysis for tomorrow, Wednesday, but I will be back on Thursday and we'll be back on Friday. I have an appointment tomorrow. So getting some work done around the house. I got some inspections on some construction that we've been doing in and around the house. So I got inspections tomorrow, so I won't be here in the morning. But hey, as I always stress to anybody watching these streams, as I conclude, anybody, right, here's the address to the office. You guys are always welcome. If you're here in Myrtle Beach or if you're local, come on in if you want to trade with us here in the office. If you're not and you're visiting, Myrtle Beach is a great vacation hotspot. If you're somewhere else in the world and you're in Myrtle Beach vacationing, stop by, check us out, say hi. I'm always interested in talking to other fellow traders. Any kind of real estate investors, anything investing business. We do run private equity. We do have the managed futures. I love talking shop. The office number is down here below. You can call our office. If you're day trading, right, there's an email. If you got questions, anybody day trading, there's a trading website that we have, teamdaytrader.com. And then, anything for our investment research and the private equity, priescapital.com. I try to hopefully make this open to the public. Hopefully it's educational. Hopefully this helps in your day trading. This is what I do. And I'm grateful that I'm able to share it with all of you guys. So with that said, as always, learn, trade, profit. And I will see you guys Thursday morning. Take it easy, guys.